Balkrishna Industries Limited Q1FY26 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not guarantees of the future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Rajiv Podar, Joint Managing Director. Thank you, and over to you, sir.
Thank you, Mrs. Huda. Good morning to everyone, and thank you for joining us today. Along with me, I have Mr. Bajaj, Senior President Commercial and CFO, Mr. Satish Sharma, Senior President Strategy and Business Development, Mr. Ravi Joshi, Deputy CFO, Mr. Sushil Mishra, Head Accounts, and SGA, our IR advisors. Let me begin with performance updates. Q1 financial year 26 was a volatile quarter on account of tariff-related disruptions. With the tariff announcements, we witnessed a volatile ordering cycle in April. However, since the 90-day pause announcement on tariffs, there was gradual return to normalcy. Pre-tariff announcements, we were subject to nominal tariff charge, which is now increased to little over 10%. We don't expect any significant challenges on this new tariff structure. However, we do believe that the complete normalcy in ordering cycle will take shape once there is permanent tariff structure in place. In other geographies, we witnessed a stable quarter. Americas witnessed a slight degrowth on account of macro situation, while the rest of the geographies
Mr. Rajiv? We can't hear you, Mr. Rajiv.
Sorry, there was some disruption at our end. Let me re-begin with the performance updates.
Sure, sir.
The geopolitical environment and the broader macroeconomic scenario continue to present significant challenges across our key export markets. Amidst ongoing conflicts, trade tensions, and economic uncertainties continue to influence cautious sentiments among customers. In addition to these external headwinds, continued tariff uncertainty has further compounded to the situation. Despite these testing conditions, we managed to achieve a sales volume of 80,664 metric tons during the current quarter. While this reflects a marginal decline compared to Q1 of financial year 25, this performance demonstrates a degree of resilience given the prevailing global headwinds. India business continues to be strong for the quarter contributed to approximately 35% to our sales volumes and approximately 14.4% in growth on year-on-year basis. This growth momentum is a testimony of our brand acceptance and will further accelerate our efforts as we launch in the PCR and CV segments. As I was mentioning earlier, in the US, the current tariff is 10%, which is shared by our customers and us. And in the near future, the resolution of the ongoing tariff uncertainties, we are hopeful for a better trade environment and improved business conditions. Given the magnitude of challenges and uncertainties in international markets, we have delivered a strong performance and outperformed the industry. As we return to stable demand environment, we expect to further outperform and improve our market share all over. On the capex front, the earlier announced capex of OTR, along with newly announced capex for carbon black, PCR and CVR are expected to operationalize as per schedule. With this, I now move on to operational highlights. For the quarter, our volume stood at 80,664 metric tons, marginally lower as compared to the same period last year. Our standalone revenue for the quarter stood at rupees 2,759 crores, including realized loss on forex pertaining to sales of rupees 1 crore. The gross profit margin in Q1 was lower on account of product mix impact, as well as 35% of the overall sales volume were contributed from India. The standalone EBITDA for the quarter was at rupees 655 crore with a margin of 23.8%. In addition to higher India contribution, the EBITDA margin impact was on account of partial absorption of tariffs for US geography and lower absorption for fixed cost due to lower sales volume. Profit after tax stood for the quarter at rupees 287 crores, which was approximately down 40%. This was primarily on account of M2M loss to the tune of rupees 154 crore. The Board of Directors has declared a first interim dividend of rupees 4 per equity share. With this, I now conclude my opening remarks and leave the floor open for Q&A.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raghunandan from Nuvama Research. Please go ahead.
Thank you, sir, for the opportunity. Sir, firstly on Europe, Europe has seen a decline YOY at 20%, and Europe farmer sentiments seem to be weak on higher input cost, impact of EU regulation. Can you talk a bit about how you are seeing the customer sentiments in the replacement market, and how do you see the recovery in this market going forward?
So the current sentiments in Europe is weak, and this is reflected in the numbers. Overall economic environment was also weak in Europe, so that is the reason for this continued numbers.
So given that now we are 4 months into the year, how do you see the FY26 outlook given all the uncertainties? But going ahead, next 2 quarters, we also have a favorable base. Would you expect to be on the positive side for the full year?
So too early to give a number and comment on that.
Got it, sir. And to Mr. Bajaj, sir, if you can indicate the Euro INR realization and the hedge rate for FY26.
So for the current quarter, it was 93 rupees 60 paisa. And for the remaining year, it is closer to the market.
Got it, sir. And just a last question before I fall back to the queue. Can you please share the freight cost as percentage of revenue that you usually used to share? Would it be lower QOQ given that there has been some fall in the global freight prices?
It was marginally lower.
Got it. Thank you so much. I'll fall back to the queue.
Thank you so much. The next question is from the line of Mumuksh Mandlesha from Anand Rathi Institutional Equities. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So I just want to understand, has there been any correction in the inventory this quarter, particularly in Europe, where there was almost 20% down, and in Q4 we saw 8% growth. So has there been inventory adjustment this quarter in Europe? And overall, sir, globally, how is the inventory situation now, sir?
So nothing specific on the inventory correction. It is just the overall market sentiment.
Got it, sir. And sir, possible to quantify what was the US tariff impact in this quarter, sir?
Currently, the tariff is 10%. Out of that, 60% is customer bearing and 40% we are sharing.
40% is you're sharing, and that continues for Q2 also, right, sir? As of
Yes.
now. Got it, sir. And so this quarter, other expenses were up 24% YOY and QoQ. Any reason for the increase in the other expenses, sir? And what should be the run rate ahead, sir?
It is the duty impact and some marketing impact.
Okay, so the US duty impact has come in the other expenses, what you're saying?
Yes.
US. Got it. And the marketing being higher. Understood.
Marketing.
Okay, so the run rate should continue as of at least for Q2 because the duty would continue,
Yes.
right, sir?
Yes.
Got it, sir. And sir, in this quarter, for the RM, sir, what kind of a reduction we saw in Q1, and what kind of benefit further we expect going ahead, sir?
So it was very nominal price reduction as compared to last quarter. And the coming quarter, we see the similar type of the prices because rubber is going up and other basket is down.
Flattish for the Q2, right, sir?
Thank you. The next question is from the line of Aditya Jhawar from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity. So you mentioned that 50% of the tariff impact was absorbed by customers. So if you can, give some sense that out of the total demand in the US market, what percentage would be domestically procured, and what is how competitors have behaved in terms of tariff impact if they are also importing from outside US?
Sorry, just to cut you off.
On the competitive dynamics.
Just to correct you on that, it is 40%, not 50%.
Sorry, could you please
We are
repeat?
bearing 40%. So we are bearing 40%.
You're bearing 40,
not
50% is okay.
Yes.
Sure, sir. And sir, any sense in how competition has behaved in this environment, sir, in terms of pricing or impact of tariffs? Hello?
So no, everybody is in the same boat. I mean, we are not sure of how they have done the cost sharing, but tariff has impacted everybody. Even if there's a local manufacturer, his raw materials are coming from Asia, so they would have got impacted with the tariffs.
Okay, so the pricing gap between us and the competition, even after the increase in tariffs, is largely of similar magnitude.
Yes, should be.
Okay, yeah, that's it. Thank you.
Thank you so much. I request each participant to ask 2 questions. Thank you. The next question is from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. Sir, first question again on these US tariffs. I understand the tariffs came sometime during the quarter and not for the entire quarter. So will it be possible to share, like, of the total US revenues for us in Q1, what percentage has got impacted by the tariffs?
So it came on 9th April, if we are not wrong. So that's practically the whole quarter, no? But you're right, it did not come for the whole quarter, but 9 days into the quarter, so it has impacted the whole quarter only practically.
Okay. Because US volumes have seen a good jump in the quarter. So this is despite the entire quarter being under tariff, and despite that we have seen a good pickup in the US volumes. Is it the right way to look at it?
So, I mean, if you look at it this way, it was originally pre-9th April, it was 26%, which came down. So that, as I mentioned in my commentary, that there was some normalcy which has come in. So they have been buying because of this revised tariff. Now we are waiting for the final note. What happens once the governments agree on some tariff rate? We will come to know what the long-term normalcy will be. It's too early to comment before that.
But so generally, what is the thought process like? Because we understand that it may go up even further. So you plan to sort of pass on the entire cost, or you probably want to continue with the current scenario of 60%?
So what we have seen is we were quick to come to a cost-sharing basis, which has impacted on this. So we will take a call once we have final numbers in front of us. We don't want to comment anything till the final numbers are there. What is the tariff basis? Is this level higher, lower? We don't know anything. So without knowing anything, it's very difficult to comment.
Got it, sir. So lastly, on the capex side, would you have any further color, like 3,500 crore we had highlighted will be the next 3 years? Any possible breakup into what can go into TVR, PCR, and how should we understand the ramp up to be in the next 2-3 years? If you have some thoughts here.
No, we are not sharing the breakup of that. We've announced an overall capex which we will be doing in the next 3 years, which will come in line in the next 3 years.
Okay, sir. Got it. I'll come back in the queue.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Thank you for the opportunity. So my first question is on the realized forex losses. So you highlighted that our hedge rate was 93.6 rupees for the quarter euro INR, but the full quarter average was around 97 rupees. So why is our losses lesser for the quarter? Can you just explain that math on how it works? How do we hedge? Like, what is our hedging policy? Do we hedge 100% of our first year exposure, or is it like 50, 60, 70%?
Rishi, hi. So it will not be prudent to compare the normal average with what hedge rate was mentioned. It also accounts for the timing differences, wherein the PCFC was taken earlier, then there was a realization or repayment against that, as well as the sales was booked at a different rate in the books, and then the debtor realization happens at a different rate. So it will not be prudent, and probably you will not be end up to doing a right math, that taking an average of a quarter and then comparing it with what we realized.
The second quarter would be more reflective of this quarter's spot rate?
It all depends on what rate prevails at that point in time, at what rate we have booked the sales in our books.
And also, just to add on to that, the custom rates are daily, it's a daily parameter. So we are booking and hedging against our sales and all, but when the actual sales gets transacted, what is the custom duty rate on that day? And that is how the gain or losses calculated.
Understood. And our hedging policy would be like for 1 year revenue expectation, everything we would be hedging, or it's lesser than that?
Yeah, we keep on rolling basis, and that too very conservative. We only hedge 80% of net receivable, which end up probably 30-35% of gross euro revenue. We don't hedge anything on dollars.
Understood. I am assuming dollar would be naturally hedged because
natural hedge,
commodity.
Yes.
Understood. And my second question is pertaining to full year margin guidance, given where we are in terms of commodity tariff pricing. Any broader guidelines you could share with, at least in terms of margins, or any headwinds, tailwinds you see going into the subsequent quarters?
So we have already given the margin guidance in the even last quarter. So it will be around 24-25%.
Understood. Okay. Thank you.
Thank you. The next question is from the line of Abhishek Kumar Jain from Alpha Accurate. Please go ahead.
Thanks for the opportunity, sir. Sir, you have imposed several rounds of the sanctions on the Russia, trade restrictions on the machinery and the Russian oils as well. So how do you see direct and indirect impact on your business?
Sir, your voice was very inaudible, Mr. Abhishek.
Are you able to hear me now?
Yeah.
So my question was on the European Union. So that has imposed many sanctions on the Russia, like that trade restriction on the machinery and Russian oil. So just wanted to understand, how do you see direct and indirect impact on your business in Europe?
We don't buy any machinery or direct raw material from Russia. oil may be coming and some derivatives of the oils locally. I don't know what way it is coming, but otherwise we are not impacted from that.
Okay, sir. And you are also falling into the TBR and the PCR segment. So just wanted to understand when will start the commercial production and how much the operating cost will increase in the near term because of this?
26.
Sorry, sir.
June, July 26.
June, July 26.
Yeah.
Okay. And how much operating cost will increase because of this in the near term, in the next 1 or 2 quarters?
This we cannot comment, I think.
Okay, sir. And my last question on the dealer inventory. So in terms of the days, how much the current dealer inventory in the export side?
It's at normal levels. There's no increase or decrease. It's at the normal level.
So it will be 2 months or 3 months?
Between 2 and 3 months.
Okay, sir. Thanks, sir. That's all from my side.
Thank you. The next question is from the line of Joseph George from IIFL. Please go ahead.
Thank you. I just have one question. You mentioned that the euro realization in the coming quarters would be closer to the existing market rate, whereas last quarter it was 93, 94. So what I want to check is, and you also mentioned that you are maintaining your margin guidance of 24, 25%. Now this euro benefit that you're getting is a significant amount. So do you not expect that to flow down to the bottom line, or do you think it will be competed away because there will be other players as well who are exporting from India and they will also have similar advantages?
No, so I think the volume impact will come, as we're saying there is uncertainty. So that may come and have some impact on the running cost, fixed costs and other costs. And the duties which were unaccounted for will have also come in place. So a lot of things at this stage are very open to give a comment. And as far as the EBITDA guidances, we mentioned that we strive to be in this range. There will be a couple of quarters which will be higher and couple of quarters which will be lower. The higher quarters are not in benchmark, and the lower quarters are one-off kind of scenario. But we will strive to be in that range.
Fair enough. Thank you. That's all I had.
Thank you. The next question is from the line of Vishal Dudhwala from Trinetra Asset Managers. Please go ahead.
Yeah. Thank you for the opportunity, sir. Am I audible to you?
Yes.
Yeah. So I have a couple of questions. First, with global OTR tire demand set to grow mid-single digit in FY26, driven by uneven monsoons in India and rising construction activity in export markets, how are you calibrating production and segment managing of agri and OTR to capture that growth without compromising margins?
So we produce only against order. We do not produce to stock. So as the orders are coming, we are producing as per that. And already I mentioned in my opening remarks that the product mix had some difference. That's why the EBITDA margin was slightly impacted. So that we will take it as per the demand. Very early to comment on what will come and where.
Okay. And second is on your asset utilization. Your new boost OTR facility and expanded rubber track line went live in Q1/26. So can you share the utilization level you achieved to date versus over 80% target?
It is in testing phase, and we will give you more commentary on that towards the end of this year.
Okay. And one last follow-up question on your Europe side. Can you provide an update on the execution of your TBR capacity expansion plan for that region?
So as I mentioned, all the expansion that we have announced is going as per schedule. I will not be giving individual breakup.
Okay, got your point. Thank you for further question. I will get you.
Thank you. The next question is from the line of Chirag Maru from Keynote Capitals. Please go ahead.
Yes, thank you for the opportunity.
So first thing I would like to know, what is the mix of carbon black in our total sales?
What is the mix of carbon black in our
Total sales?
approximately
9%.
And sir, will it be possible for you to provide volume numbers too?
No.
Okay. So second thing I would like to know is that as we are adding new product lines like PCR and related to commercial vehicle as well as the passenger vehicle, I wanted to understand your philosophy and thought process. What would be our right to win in this segment, as we were earlier completely focused into majorly off-highway tires?
So first, there is no dilution of our focus in off-highway tires. I'd like to make that statement very, very clearly. Then the second point is we are looking at the market keenly in finding the white spaces and the areas where to play. So we have a strategy which cannot be unfolded at this stage, but we are looking at the market keenly and devising our own strategy, and I think we will surprise the market positively.
Fair enough. So secondly, I wanted to know, as you said that the product mix shift towards India has led to dilution of gross margins. Could you just give us a ballpark to understand it better? What is the pricing differential in international market compared to India?
It's marginally, maybe about half to 1% lower. You're talking about margin, right?
No, sir. I am talking about realization. Like if we sell it for 100 rupees in India, what will be the selling price in international market? So it would be easier for us to understand. Like if the mix shifts towards India, there can be dilution taking place in GPM level.
Around it fluctuates between different product mix, but you can take a range of 8 to 10% lower.
Okay. And this affects
on the margin front, it would be between half and 1%.
EBITDA level, it would be half to 1% only.
Yeah.
Okay, fair. And sir, just wanted to understand, are we on track for the rubber track expansion by H226?
Yes.
That is it from my side. Thank you, sir.
Thank you. The next question is from the line of Hemang from Anvil. Please go ahead. Hello.
Yes.
Yeah. Good morning, sir. Sir, I wanted to check that since we are doing 20% from India over next 5 years, so the margins, you just said the gross margins would be diluted. So there will be an impact on EBITDA margin now because the staff cost is higher in India comparatively. As in, we don't have the labor arbitrage for Indian products.
So as I mentioned in my in the last meeting, that despite all of our new businesses and India market strategy, everything, we expect blended margins post full commercialization to be in the range of 23 to 25%, and we will strive to maintain that.
So how will we have an advantage in passenger? Just thought, how will we have an advantage in passenger cars and TBR, which we are planning, because we have many other competitors in Indian markets whose margins are in the range of 16%.
I had made these announcements in my last quarterly when I announced our 5-year plan. So if you've seen that, we had mentioned that we will be entering into premium categories and radial categories, and there will be superior product mix, and we'll have some operational advantages put together, which will help us maintain these numbers.
Sure, all the best, sir. And sir, in terms of near-term challenges, anything on the volume outlook, which we did around 315 tons this year?
As I mentioned earlier, it's too early to comment on volume guidance.
Okay. Thank you, sir. That's it from my side. Thank you. The next question is from the line of Raghunandan from Nuvama Research. Please go ahead.
Thank you, sir, for the opportunity again. Firstly, on the 30,000 capacity of advanced carbon black, has the revenues commenced from this business? How do you see the ramp up in FY26?
Not significantly. It is still in the trial stage. And this end of the last quarter, means end of the calendar year, we expect to ramp up this business.
Got it, sir. Thank you. And on the track side, how much would be the share of tracks in our revenue currently? And given that the new capacity will come up in H2, how do you see the ramp up there?
So tracks is currently in trial stage, and so it's very nominal.
Thanks for that, sir. My question was to Satish, sir. How big would be the current BKT dealer network in India? And would you be using the current network for TBR, PCR? How do you look at the strategy on distribution of new products? Would you be leveraging it, or would you be building it from the scratch, especially to target the PCR segment?
Raghu, the approach and philosophy of distribution will by and large be the same, and that's where the leverage in terms of positive points will come. But the distribution per se largely will be newly made. So some part of it might overlap, a very little portion, but largely it will be a fresh start.
Got it, sir. That would mean that there will be a gestation period for building a network and capturing that 5% market share. And would that be the reason why you're targeting 2030 for that market share target?
Yeah, I mean, that's a fair, that amount of time will be required to go from 0 to 5%, whichever way you look at it. And our product, like we said in an earlier question, comes out in the middle part of next year. And this is the time gestation period which we will be using to build the distribution.
Got it, sir. And just a clarification on how big would be the existing network of Balkrishna in India?
We would be having close to about 76 odd distributors.
Got it, sir. Thank you very much.
Thank you. The next question is from the line of Chirag Maru from Keynote Capitals. Please go ahead.
Yeah, thank you for the follow-up. So, will it be possible going forward to give some segmental numbers, as carbon black has already reached almost 9% of the sales? So we can get some segmental bifurcation on sales and operating margins?
At this moment, we are not giving the breakup. So we'll see in the future if we decide to.
No issues. So secondly, will it be possible for you to give us what kind of market size the rubber track product would have at this moment, just to understand how big is the market?
So market is huge. With our current capacity in the future one which we have announced, even if we get there, we will be looking at about 3 to 5% of the market share.
Fair enough. Okay. Thank you, sir.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Rajiv Poddar for closing comments.
I would like to thank all of you once again for taking the time out, and we'll see you again next quarter. Thank you. Stay safe till then.
On behalf of Balkrishna Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.